Yo, welcome back to the channel, everyone. Hope you guys are all doing well. It's Oscar, and we're back again with a quick little stock video. Today we're going to be talking about why you should basically only choose, let's say, maximum 2 to 5 tickers to actually look at when you're trading. And we'll go ahead and just get right into this. If you choose 2 to 5 tickers, let's say, if you're trading the same tickers day by day, you get to basically know how they work and basically their characteristics. If you go ahead and take, let's say, if you trade Walmart day by day, like I do, or Walmart, I've been basically trading almost every single day for the past 2 weeks or something. But you get to learn how these stocks work, and obviously you can see I have kind of trend line set here. I had a wedge here that broke. I have these support levels. I have resistance levels. I have supply zones. I have demand zones, stuff like that. So if we go ahead and look here, this was the run up before earnings. I did play it before earnings, and I did obviously, I did well with earnings. I think I had like 104, 105% trade on that. But hit this supply zone up here, broke it. We could almost call this a resistance zone basically. And then it just kept falling. It kept bouncing off these levels, dropping and bouncing and doing all this stuff. It's basically a game of supply and demand. Same thing kind of goes with this wedge here that happened last week. I think this was even was it last week? Was it 25th? 2 weeks ago on Thursday actually. So had this wedge right here, top to bottom. It tried breaking up to the upside and then just fell. I think this was the day, this was actually the next day. So it peaked in after hours after it broke the wedge, but then ultimately the Friday afterwards we had that massive flush that took everything down. So obviously you can see I have these lines drawn on Walmart. Like I say, I do play Walmart every single day. I played it yesterday. Today is Wednesday, then the 7th. Played it again this morning. I played it last week. It's basically one of these tickers I always look at. Same thing goes with AMD. If we look at AMD, I have all these levels on AMD, and it's the same thing. They bounce, they bounce. These are support levels. These are some of these lines I have to clean up. They're bunch of old like pre-market highs and pre-market lows, but even like right here we got a touch here, resistance, bounce, touch, bounce. It's literally a game of supply and demand. It's basically as easy as it is. And obviously you guys see I have volume down here at the bottom, and then I have VWAP. I don't use any MACD. I don't use anything other than that. I use basic VWAP, volume, levels. I base most of my plays on price action. If price is going up and price is moving up, I'm going to get into the play. Like this morning. I was in a SPY call. This is a 15, but if we drop down to the 5, I was in a SPY 392 this morning. Obviously, we can see SPY went up to almost 399. So I should have stuck into that trade, but let's see here. I think I had to leave around 7:30ish, but I think I got in maybe somewhere here, wrote it. I don't remember. I think I took profits on it. It wasn't much. It was probably $8 or something like that. But if I would have just let it ride, maybe kept the trailing stop on it and just maybe had it set for 10-20%, that would have rode all the way to the top. I could have had a stop limit or sell limit, sell order up here, or even right here for at these levels that I want it, and it could have sold by itself. So that's why you want to trade a select number of stocks. So there's SPY, AMD, Walmart, Exxon. Those are my main tickers. I have these other ones like Coinbase. ChargePoint was on here just because it was in my Discord group that I'm in. There was a lot of action on it right now. This morning it's up. It was up 9% today. Lucid I have up here because it's one of these tickers. I have shares of Lucid. Made a bunch of videos on that stuff, but Lucid's also a cheaper alternative to trading Tesla, although Tesla doesn't move as much as it did, obviously, pre-split. It's still, Lucid follows it to the T almost. Little slight differences, but it's the same thing. And obviously AMD is basically a sympathy play for NVIDIA, but I trade AMD more and more than NVIDIA. NVIDIA option contracts are pretty expensive, so AMD, I also like the price action on AMD. So my current list: Walmart number 1, SPY number 2, AMD, and then Exxon. There's not really anything other than that I play. I seem to be finding basically every day I can trade Walmart, whether it's to the upside or to the downside. You can swing Walmart relatively easily. You don't have to worry about it. Options are, the contracts are cheap. There's decent volume, and a majority of the buyers are buying shares and not options, that what I've seen. So yeah, that's kind of the video I wanted to talk about. Just keeping a short, small list of different tickers that I play, and what you should probably think about for the future if you wanted to get into options trading and kind of trading in general. Trade the same few stocks you trade day in and day out, and you'll learn them like the back of your hand. You'll be able to do well. So hope you guys enjoyed this video. If you did, please drop a like. If you have any comments, put those down below. If you're new here, please consider subscribing. Share the video with your friends and families. Anyone who's thinking about getting into trading or the stock market or something like that, I'm sure it'd be really helpful for them. So thanks again for watching, and I'll see you guys in the next one. Peace.